Yo, yo, yo. Welcome back to the channel. In today's video, I want to break down a macro analysis of AMC, where AMC stands as of right now, and why, generally speaking, I'm bullish, why I see upside in the future. This video, it doesn't matter what happened today in AMC's price action or anything. If you're watching this, this is more of a long-term video. This is being made on October 21st, but you could be watching this anytime. It just depends on what goes on with AMC, and it's not applying to day-to-day, okay? If you want to connect with me on other platforms, I have a Discord, which is completely free to join. I have a Twitter. You can follow me there. And I have a TradingView link down below. TradingView is the application that I use to create these charts. I use it on mobile as well as desktop. And if you sign up using the link down in the description below, if you do a premium subscription, which you don't have to, everything I use for the most part, especially in this video, is going to be free to use. You sign up there. If you ever do decide to go premium, or you decide to go premium right away, I get a kickback and commission, so that's appreciated, but obviously you can go sign up for yourself without the link if you want to. It's just a cool tool to use. Anyway, let's get into it. So the point of this video is to look at AMC's entire technical history since it's been a public stock on the market, which began in 2013, and see where we are from a macro perspective. There are some really relevant levels that we're in the recent months we've been toying with since our run up in June, and these levels are relevant not only in the current space that AMC is in, but as you can see, in 2015 and 2017. So let's begin there. In 2015 to 2017, AMC had a double top form, which, and this is the weekly chart, I was on the monthly before, which sent the price down. It did find a middling support here at this $10-ish, $11 level beginning in October of 2017. It bounced here up to the $20-ish level, and then it got sent back down. You can see that it actually tried to keep this as support and eventually was rejected down, right? This is an ABC correction in Elliott wave. And these are very easy to see, especially on a macro scale. And keep Elliott wave theory in mind, because it's going to play a role in where we think that the stock is going from here, where we stand today at least. None of this is financial advice, by the way. This is just my opinion. I'm doing this for entertainment purposes only. Do your own research, make your own decisions. But then after we had this run down here, we went all the way down to almost $2. This was in March of 2020. COVID was playing a big role in this. Obviously, theaters were being affected. Everybody remembers COVID, right? So we had this big crash down here. We actually triple bottomed at this $2-ish level, a little bit below, but pretty close, right? And then we bounced up, and then we came back down and tested it again. This was in November and December of 2020. But from a macro perspective, if you look at it like on the monthly chart, a larger scale, you had a double bottom. Maybe you could call it a triple bottom, but they functionally work the same in regards to a chart. And the reason that we know that they're a double bottom is because after that, beginning in January of 2021, when we saw our all-time low, which is really important to know, by the way, which is $1.91, bulls came in and protected this price. And after that, you saw the move in January of 2021, which is when most people in the 8 movement began paying attention to AMC stock, somewhere in this period, right? January. Obviously, everyone remembers the GME run and the AMC run in this time. And then they turned the buy button off, and it sent the price down into a spiral. And this actually found support here at the 0.786 Fibonacci level, and then eventually found even stronger support at the 0.618 once it was able to move up. Now, another side of that bullish confirmation was that we had this middle trend line that you can see was causing support and resistance. We even We even had a support back here all the way in November of 2017. This zone was support in December of 2018. And then eventually became resistance here in 2019 before the price was sent down. Well, we came back up here, and after trading in this zone for a while, we had this move in May to June of 2021 on this middle trend line, or not a trend line, but rather a horizontal support resistance, but behaves similarly to a trend line, and that sent the price up into where we currently are now. We are now finding support at the same zone that we had for our double top in 2015 to 2017, as you can see here. It's, you know, right here in this 35-ish region is our most recent bounce. So this is significant, right? Significant support for AMC historically. So what does this mean? Well, now that we're all caught up on the history of the stock, which most people didn't care about until like here, what I believe is this double bottom was a macro signal for a longer term bullish move for the stock, and obviously that was proven. But what does that mean? Well, Elliott wave says that it's a 5-wave sequence, 1, 3, and 5 being motive waves in the general direction, and that can also work to the downside. But since we're in an upward move, I believe that what we've seen here is a wave 1, a wave 2 down for correction, a wave 3, a wave 4, and we're going into a wave 5. And again, this is October of 2021 when I'm recording this video. I may refer people back to this in the future. That's the only reason I keep bringing it up. Now, a few rules about Elliott wave is that wave 3, which is here, wave 3 is most often the strongest wave in a 5-wave sequence and never the weakest in a 5-wave sequence. And because I'm so confident that this is a 5-wave sequence, and usually 5 is more related to wave 1. Because I believe that this is a 5-wave Elliott sequence, I would assume that we can draw some sort of extension range for this. And the way that we use our Fibonacci extension, just to give you an example, is if we drew from here, the bottom, the all-time bottom, the $1.91 up to the top in January, this 20-ish dollar level, 21, 22, whatever, and we drew back to the bottom here when we had our correction after the buy button at like $5, we were able to see that this Fibonacci extension tool could have predicted the top for AMC in wave 3. You see that there, 3.618 with $71.56. It's probably not exact, but very, very close. And you can also see that these ranges were actually relevant as support on AMC's run down post the June run. So if I wanted to try and see what I thought that wave 5 could do, I would just pull the extension from February 8th, the low here at $5, to the top here in March. Well, no, I'm sorry, the top here in June. Sorry about that, at like $72, and then all the way back down to the support that we found here at like $28. And that would give me these levels. So again, not financial advice, not a guarantee that any of this is going to happen, but these would be the sorts of levels that we look for. Historically, the 3.618 we know was relevant for June. Again, wave 3 is typically the strongest wave. And so if we're being, let's just say that that was the overextended version of what AMC can do on these sorts of runs. I mean, we could aim at the 2.618 or the 1.618 in this case to see these relevant Fibonacci levels that we could expect. So perhaps what that would look like is here. Right? And this isn't for time frames or anything like that. It's just a way to look at the stock. And also, I'm not talking about like obviously the short squeeze, MOAS narrative, the narrative surrounding synthetics on the order books or whatever. I'm simply looking at it from a technical perspective. So please understand that it's not about fundamentals. It's more about the technicals here on the channel and what we talk about, and just understanding the emotions of the play. And the reason that I think this is relevant to do is just because I believe that the stock is being manipulated, as most people in the ape community do, and that what you're seeing is some sort of fabricated price action that's not authentic. And so based on that, I think that they would use technicals and technical indicators in order to have this process draw itself out. The other thing that you want to look at is your trends. So these are our current bull trends and the trajectory. I have a previous bear trends here, right? And then our current bull trajectory. And typically, historically, we've hit the top of this each time. So, and this is an exponential trend line. So if we do see that wave 5, we could also see that exponential move depending on how long it takes to whatever number. And then on the other side of it, if you do want to go into the MOAS narrative, you could say, because Elliott wave works in this way, and I'll show you, but let me just show you the example. So on smaller time frames, right? So as far in as you want to zoom, you can also see Elliott wave playing itself out. An example would be here. You have a 1, 2, 3, 4, 5 for the run in June, May to June. So if we were to say that, in looking at the MOAS narrative, right? Like if we want to say that this thing is going to do something that we've never seen before in the stock market from a MOAS perspective, you could say that this sequence is actually just a part of a larger 5-wave sequence for AMC. And again, wave 3, 4, and 5 could create this sort of scenario. Again, not financial advice, but just analyzing the chart and finally talking about MOAS, because I've never talked about MOAS on the channel. And I might make another video that's a little bit more specifically related to MOAS. And what that might look like from a technical perspective. But obviously, you have to understand that technically I can't predict when MOAS is going to happen, but I can try to understand the market conditions and the technicals that are tied to it to see when maybe a bullish institution that might be in control of the price at this point would want to see something like that happen. Does that make sense? The type of pressure that they may be applying to this. And I'm going to have a Wyckoff video too by the time I release this, where I look at my macro Wyckoff analysis, which is just another tool that I use, but basically this is what that analysis looks like, and then this is what the schematic looks like. These are two different Wyckoff schematics, but you can see here, and this is just a basic overview because that's not what this video is about. But anyway, if you want to check out that video, make sure you subscribe and turn on the post notifications, and then also it should be in this playlist at the same time, so you can just go and click over to that. So just be on the lookout for that, and yeah, other than that, hope you enjoyed the video, and until next time.